Have you ever sat in front of the screen, eyes glued to the chart, heart pounding so hard you can hear every beat in your chest? Your hand rests on the mouse, slightly trembling, while your account is glowing red. Each negative number ticks up mercilessly, and you feel a knot tightening in your stomach. That feeling doesn't need many words. If you have ever traded with real money, you know exactly what it is. It's not just a loss. It's not just a trade going against you. It's a very primitive, visceral fear. The fear of losing money. The fear of being wrong. The fear of not being good enough. The fear that this entire path, all the hours you've spent studying, will eventually end in public and private failure. That fear seeps into every decision. It whispers when you're about to click the buy or sell button. It screams when the price moves against you by just a few pips. And it tightens its grip when your account turns redder than you ever expected. I know that feeling because I lived in it for years. There were nights when I lay in bed, eyes closed, but the charts still played in my head like a horror movie. I asked myself dozens of times, where did I go wrong? Maybe I'm just not cut out for this. Maybe this is all just an expensive illusion. If you're listening to this and you feel your heart sink a little, then chances are I'm talking directly to you. If you've ever felt like your emotions were sabotaging your potential, hit the like button right now, not for the algorithm, but to acknowledge that you're ready to face this. Now, before we go any further, I want to tell you a truth that very few people in the Lamborghini and easy money side of YouTube dare to say. Fear of losing money is not bad. In fact, it's a good sign that many new traders enter the market and feel ashamed of being afraid. They think a strong trader must be cold, decisive, and unshaken. But that image is deeply misleading. If you don't feel fear, you're dangerous to yourself. The money you're trading isn't just a number. It's the time you spent at a job you might hate, the effort you've put in, and the late nights you've sacrificed. Being afraid of losing it is natural. I remember the first time I moved from demo to real money. On demo, I was a god. A losing trade? Whatever. Just click another one. But with real money, just one red candle made my mind lock up. I used to think I was weak. But after years of pain, I understood. Fear is a sign that you're awake. The problem isn't the fear, it's what you do with it. Most traders let fear drive the car. Professional traders acknowledge fears in the back seat, but they never let it touch the steering wheel. Step one to staying calm is understanding that the goal isn't to be fearless. It's to become someone who can trade while still being afraid. It's like learning to drive. On day one, you're terrified. A few months later, you aren't panicking, not because the danger is gone, but because you got used to the environment. Trading is the same. Fear doesn't disappear. You just grow bigger than the fear. This brings us to step two. Small position sizes and low leverage. This is the foundation of survival. There is a hard truth. Most traders don't lose because they lack knowledge. They lose because they trade too large for their psychological capacity. You might have an ICT or SMC strategy that works, but if your position size is so big that a 5-pip drawdown makes you sweat, your strategy doesn't matter. You're no longer trading logic. You're trading survival instincts. High leverage doesn't just amplify profits. It amplifies panic. When you have to pray for a trade to work, you've already lost the moment you entered. A trader's first goal is not to make money. It's to survive long enough to learn. When your size is small enough, your heart stops racing. You can actually step away from the screen. If every losing trade keeps you awake at night, you're trading too big. There is no shame in moving slowly. The only mistake is trying to move faster than your mind can handle. Ask yourself before every trade, if this hits my stop, will I still be calm? If the answer is no, reduce the size until the answer is yes. Step 3 is the stop loss. Is it discipline or disappearance? Traders don't die from one loss. They die from refusing to admit they're wrong. A stop loss is a psychological test. It's a test of whether you're mature enough to say, I was wrong. Cutting a loss isn't just about money. It's about bruising the ego. That's why so many traders move their stops. They hope the market will forgive them. But the market has no mercy. Every time you move a stop loss, you're telling yourself that your emotions matter more than your plan. And a trader who prioritizes feelings over discipline will eventually be removed from the game. Once you place that stop, your job is to stand still. If it hits, you lost an amount you already accepted. This acceptance is where peace comes from. Step 4. Choose one method and stay with it. This is how you escape the trading maze. Many of you are lost, not because you lack information, but because you have too much of it. You jump from one indicator to another, from one guru to another. You're looking for the holy grail when you should be looking for consistency. A mediocre system applied consistently will always beat a perfect system destroyed by emotion. When you stay loyal to one method, you build trust. Trust doesn't come from winning. It comes from repetition. You need to know why you enter and why you stay out. Only when you stop jumping around will the market start making sense. If you're finding value in this perspective, consider joining our community by subscribing, not for the numbers, but because you're committed to the long-term mastery of your own mind. Finally, step 5, psychology control. This is the final battle. Trading has never been a battle with the market. It has always been a battle with yourself. The market doesn't care about your smarts or your past wins, but your emotions do. Most catastrophic losses come from a loss of control, not a bad setup. After a win, you get cocky. After a loss, you get desperate. In both cases, you stop being a trader and start being a gambler. You can't control the market, but you can control your response. Start keeping an emotional journal. Record how you felt, not just what you made. On days you feel tense, trade smaller. On days you feel irritated, don't trade at all. A mature trader knows when to walk away. When you control your psychology, the fear of losing money decreases because you trust your process more than you fear the outcome. Money becomes a byproduct of your discipline. Don't try to defeat the market. Respect it. Respect the risk. Respect your own mental state. Fear is a signal, not a master. If you apply these 5 steps, accepting fear, trading small, respecting stops, staying consistent with one method, and monitoring your emotions, you won't get rich overnight, but you will become a trader who stays. And in this game, those who stay long enough are the ones who eventually win. Focus on the process, and the results will take care of themselves.